Hey, welcome to another episode of Making Billions. I'm your host, and today I have one of my dear friends, Brett Martin. Brett is a co-founder and lead investor of Charge Ventures. He's a co-founder and investor of the work-from-home startup Goliath Kumo Space and a data science professor from Columbia University. So what this means is whether you're a funder or a founder, Brett Martin is about to bring an insane amount of wisdom from scaling, starting, and funding a venture deal. Brett Martin, welcome to the show, man.
Ryan, thanks for having me. Pretty excited to be here. A lot of stuff to cover today.
Yeah, I know. You and I have spoken offline. We've got to know each other a little bit. I'm so impressed with everything that you've done. I mean, from the startup world to living on a sailboat, and I mean, there's so much stuff. I don't want to steal your thunder, but Brett's got one of the coolest stories. You're gonna want to hang in there. And then at the end, Brett's got some pretty interesting advice that I think is going to help many of our funders and founders around the world. But before we get into that, Brett, maybe you can walk us through a little bit of how it started for you and walk us up to all the fantastic stuff you're doing today. So where did it start for you?
Yeah, I mean, well, I've always been entrepreneurially inclined, started selling seashells on the boardwalk in front of my house in Ocean City, Maryland. And then up at Dartmouth in college, I got my first taste of sort of venture capital and sort of high growth startups when my friends and I won the Tuck business plan competition. We basically in 2002 came up with this idea of, how do we insert advertisements in massive online video games. And at the time it sounded pretty wild. And a few years later, actually, a company called Massive sold to Microsoft for $300 million. And I remember thinking to myself, you know what, we should have pursued that idea, and then we would have had that big exit to Microsoft. So that got me excited about high growth entrepreneurship and never looked back.
Awesome. And then where'd you go from there?
So, after that, I was not so inspired. I went to work on Wall Street with all my buddies in New York. I think the core goal there was just financial independence. I never wanted to have to ever, worry about money, make enough money not to worry about money. It's a core value of mine. And, while I was there, just basically as soon as I got my second bonus, I turned to all my buddies from college. I said, all right, we made some money. Let's go travel. This was 2006. My friends all looked at me. They said, Brett, we're 23 years old. We're making $250,000 a year. Go to hell. And so I had one buddy who was an English major. I think he was down after helping clean up after the big mess in Biloxi, Mississippi, the big hurricane. And we basically found a 50-year-old sailboat that about 30 feet long, and we took that and we sailed that from Maine all the way down to Dominica, which is about a little more than halfway down to South America. So we went 6,000 miles at about 3 miles per hour. Crazy stuff: pirates, water spouts, drug runners, caught in storms, blown 300 miles out to sea. Definitely thought about death once or twice, but an amazing time to be had. I have to say, at 23, the risk portion of your brain is not fully formed. I learned after the fact.
Oh my gosh. And so you're living on a sailboat, having all kinds of adventures from Wall Street to seafaring. And then I think you dipped your toe into the media world. Maybe you can walk us through a little bit of that and how that helped you to move other places in your career.
Well, totally. So when I came back, when I was sitting on an island, I remember in Virgin Gorda, I met a hedge fund manager, and it was funny. I was really interested in what he was doing, and because I was thinking, okay, what job am I going to get back when I get off this boat? And he was really interested in what I was doing, and it occurred to me that he had spent his whole life, doing this really prestigious career just to do what I was doing at 23 with no money whatsoever. And I kind of realized that, you don't need money actually to enjoy, all these amazing things. And so you never really want to do anything unless it's what you really want to spend your time doing. Never means to an end is not a way to live a life. You should just be doing what you want to do the entire time. So when I got off the sailboat, I had 6 months to kill. And so I wanted to be in a rock band, actually. But the problem was I didn't really play any instruments. And so I had some friends, they were all amazing musicians. And so I, sort of assembled them and we started playing Rock Band. My good buddy, Timmy, who's now a professor of neuroscience, he taught me, which buttons to press, quote unquote, on the bass. And while I was doing that, I started working at this little thing called Vice Magazine. And, Vice Magazine was basically started by these derelicts from Canada who had basically were swindling the Canadian government out of grant money. They basically wanted money to throw parties and do blow. And so they got, grant money to do this, and enough grant money to open an office in Williamsburg, New York City. And, what they did have, Vice, right? That's a Canadian company.
I know of them. Yep.
And so they started, obviously, one thing they really did have an idea of what was hip. I remember the first thing they staffed me on editorial, and my job was to research how to pee different colors because someone wanted to pee in a rainbow. And I was like, I don't think this is the right staffing for me as much as I think. And so I quickly got moved in the marketing department. I was the second marketer. Just to put this in context, today Vice is a multi-billion-dollar media organization, but at the time it was this sort of ragtag operation. And I was the second person in the marketing department. And we had this mission, which was, how are we going to grow from nothing, basically 60,000 monthly page views into millions. And so we basically bought a bunch of traffic from porn websites, and then we just smashed it up against Vice.com. And at the time, the internet was so nascent that no one really checked to see what the bounce rate was. And so we basically puffed out our chest and said we were, doing millions of monthly uniques. And then, I built their first spreadsheet, which was basically they were selling, this was a good entrepreneurial lesson. They were selling so many advertisements. They didn't even know if they had the inventory that they were selling. They were just selling it. And so we built a model to calculate their inventory. That was a pretty good lesson about fake it till you make it. And after that, I was teed up. I was pretty fortunate. I did this thing called a Fulbright scholarship, which is basically I learned this lesson. It was a fully sponsored government funded research grant, and I did that. I sort of figured out how they awarded them, and then I ended up getting it to study El effetto della globalizzazione sulle industrie tessile e della moda, which is the textile and fashion industries in Milan. It was a thinly veiled attempt to hang out in Milan with the beautiful people. I quickly realized that, basically models were not that interesting. And that was a pretty bad reason to choose to do something. So I sort of, in 2 months, wrote my research grant and then quickly thought about what did I actually want to do. And at the time, it was 2007, sort of Web 2 was, happening. Facebook was just really starting to take off. There was this really exciting energy about, sort of the internet being, controlled by the people, everyone being able to shape the internet in their own image. And so I said, okay, I want to get into tech. How do I do that? I'm actually stuck in Italy, which is pretty far from Silicon Valley. And so I ended up just interviewing hundreds of VCs and CEO founders of publicly traded companies over Skype from Italy to build out my network. And that was actually how I broke into tech and really never looked back. Ever since then, been building or investing in early stage venture capital.
Wow. That is incredible, man. From sailboats to hanging out with hedge fund managers to this ragtag group in media and then hanging out with models in Italy. You've had quite the career trajectory, and we're not done yet. So now you broke into tech. How did you break in? And because there's a lot of people looking to do that, how did you break in, and where did that take you to today?
I mean, in truth, I came back from Italy, and I had actually what I still would say is my worst year ever. It was 2000. 2008, and I was ostensibly finishing writing my research, which we eventually got published in HBR, Harvard Business Review. But in practice, I was actually kind of drifting sideways through life, trying to figure out what was my next step. And I was stuck in analysis paralysis, trying to decide, okay, do I want to go get a PhD? Do I want to start a business, or do I want to do venture capital? And at the time I had something like 8 or 9 interviews with, a venture capital firm in New York City. And I was thinking to myself, I was so young and naive, and I was like, why are these people not hiring me? I feel like I'm perfect for this role. And I was just such an idiot that I didn't realize, well, it's 2008. The sky is falling. And, they do not want to add any burn. And, they ended up taking an analyst instead of me. I felt like I would have been a good deal sourcer, getting deals done. And they ended up taking a much more sort of quantitative oriented person. And it was because they didn't want to do deals, actually. They just wanted to preserve cash and sort of triage the portfolio, which I only really figured out years later. So my hand was kind of forced. I said, screw it. I'm going to start a company. And so I actually grabbed the smartest buddy I knew from Dartmouth, and we moved down to Austin, Texas, and did my failed startup number 1, which I would say was really more of an intensive coding project than a startup. And ultimately moved back to New York City and joined a small venture capital fund. It was called App Fund, and it was a tablet-focused seed fund. So it was 2 guys, Daniel Klaus and Kevin Wendell. Kevin was I think he was like the first employee of Fox. He had started CNET and a bunch of other companies. Really great guy. And the premise was, okay, there's going to be this wave of innovation coming from the iPad, right? And we did some deals. Invested in a company called Fingerprint Play, which is still going. I invested in a company called it's called Trax, that eventually turned into Canvas and eventually sold to Verizon. That was my buddy Vic Singh. He's now a GP at ENIAC Ventures here in New York, good friend of mine. And ultimately they decided, okay, we don't want to invest. We actually want to build. We're more entrepreneurs than investors. And I said, okay, well, that's cool because I'm going to start a company. And, I'm going to do this anyway. And they said, well, why don't you just do this here? So I said, all right. And that was my first company. That was Sonar Media. And, at the time it was basically, so the idea with Sonar was it was a proximity-based social network. So it was like, how do you take all the, at the time, everyone was just spewing their information online. This was before people were really aware of how the internet worked. I think, people were just posting their location. They were checking in on Foursquare. They were syndicating that to Facebook and Twitter, and basically letting the whole world know exactly where they were or where they weren't, not at their house. And we took all that information, and then we smashed it up against where you were in your, using your iPhone. And we could literally tell you in 2010, 2011, we could tell you, who was that attractive young man across from the bar, and the fact that he had a podcast, and that you had 3 mutual friends in common on Facebook, which even to this day sounds kind of futuristic and insane. We were doing it 10 years ago. I can assure you we were at least 20 years too early, and that was Sonar. That was my first startup. It was a crazy ride. We launched a TechCrunch Disrupt. We were runners up. We got 300 press mentions in a 6-month period, New York Times, Economist, all sorts of crazy stuff. We're at South by Southwest getting interviewed by, Fox and all the major networks. And then we completely failed, and I lit multiple millions of dollars on fire. Our entire space froze over like the 9th circle of hell. We were basically destroying everyone's battery, and the 50 other companies that did the same thing as us were destroying everyone's battery. And everyone was like, what is this bullshit? I don't care that someone is next to me and we have 3 mutual friends on Twitter.
It does me no good when my battery's dead.
Yeah.
So I get it, man. That is, it's so wild, man. So, and you went from that, and so you had some success, you've had some learning moments, and you're traveling, and your current state or your future at the time is starting to take shape. And so from there, my understanding is you launched from your successes and your lessons learned, you took all of those and you started your own venture capital fund known as Charge Ventures. Maybe you can walk us through a little bit of Charge Ventures, what it is, what it's all about, what you invest in, and then we can kind of go from there.
Totally. So, I was coming off a startup and I realized that, you should really only start a startup if you have an edge or a unique calling. And so I didn't know what that was, but at the time it was 2015 and I really had only been doing startups, aside from a couple years at the bank. I really had only been building startups my whole career or investing in them. And so I said, okay, I don't want to do something unless I feel my calling. And, in the meantime, I'm going to invest in startups. The problem was I didn't have any money to invest. And so I said, okay, well, how do I invest in startups without any money? Well, I guess I got to go get some money. And so my Fulbright advisor from, a decade ago at the time, it was this Greek guy. His name is Thanos Papadimitriou. We'd worked together in Milan, but he was a Greek guy. And he reached out to me and he said, hey, we've got this interesting situation over here. Have a couple of multi-billion-dollar family offices. They're investing willy-nilly off balance sheet, and they really want to professionalize. They see the opportunity in early stage tech in the U.S., but they, really want to professionalize their operation. And so I said to myself, well, I had just gotten out of a 6.5-year relationship. I just got out of a long lease. And, summer in the Greek islands didn't sound so bad. So I went over to Greece for what I thought was going to be kind of like a 6-month consulting project. And then, you know what? Now here I am 7 years later, investing out of our third fund. And, it's funny that the twists and turns that life makes. But, that's Charge Ventures. We are a New York-based pre-seed, seed stage venture capital fund. We invest anywhere from like $300K to $1 million into companies like just getting off the ground. We like to say it's friends, family, fools, and Charge Ventures. That's who invest as early as we do. And
Nice.
That's Charge. I have a couple partners, Thanos, and my partner Chris Sabachi. And we just love getting behind people when no one else is willing to. I like to be the first.
I love that. And that's certainly, I can echo your voice on that sentiment as well, that that's why I got into ventures, to say, you know what, this is where I can make the most impact. I can consult and advise and be on boards and just support people in building their dream, just like many people did that for me. So good for you on doing that. And seed, that's pretty hardcore, man. So triple F plus Charge, right? Friends, family, fools, and Charge. Throw them all in there. Those are the people you might have some success with. So that's incredible. So what are there sectors that you guys, for our fans around the world who are starting a business and maybe looking at entering their seed round, what sectors do you guys like to invest in?
Yeah, totally. So we do, basically we do a fair amount of Web3 infrastructure. We were early investors in a company called Bison Trails, which sold to Coinbase for over $1 billion. I used to cover healthcare services on Wall Street. And so we do a lot of direct-to-consumer healthcare. And now we're actually doing a lot of B2B healthcare software infrastructure. We think that's going to be a huge, we think healthcare is going to be what fintech was like for the past 5 years. We think healthcare is going to be like for the next 10. And then because I teach data analytics at Columbia Business School, and because we invested in a company called Grin, which is a creator management platform, we did the seed. They're worth over $1 billion now. We also we're really excited about the intersection of AI and creativity. So those are the three big foci for Charge Ventures. And so, anyone working in this space would love to hear from them. It's Brett, BRETT at charge.vc.
Awesome. That's incredible. And dude, we still haven't rounded out your entire background. I mean, so we've got you're teaching data analytics at Columbia University. You started Charge Ventures, which you like AI, Web3, life sciences or health tech, whichever dimension you want to call that. But you didn't stop there, brother. You kept going. So now if that wasn't enough to keep you busy, you also got this other business called Kumo Space, which, by the way, Kumo Space, Kumo Space, just on their landing page is phenomenal. But I don't want to steal your thunder, but it's one of the coolest startups I've ever seen. So maybe walk us through what is Kumo Space and just some of the background that you've gone through on kind of raising that next startup.
Totally. Well, so Kumo Space, it was a pandemic baby. You know, I was in the pandemic, looking for deals, doing venture capital. And, I had been doing remote deals because I had foreign LPs. I had been doing deals over Zoom since 2016. So doing deals without having meeting people in person was actually not a foreign concept to me at all. But what was foreign was only doing deals over Zoom. And, I felt kind of a few months into the pandemic, I actually started to feel like a crappy VC API. So, you would put in an hour of video chat with me. You'd usually get a pass. You'd occasionally get an investment. And more often than I'd like to admit, you would get nothing back, which, I'm not something I'm proud of. And so I was like, man, this is sort of taking the love out of this job for me. So much of what I love is like working with entrepreneurs, getting close to them, feeling that the personality and like helping people become fully expressed. And, doing everything Zoom. So I said, you know what, this cannot be the end of history. Like if Zoom is the end of video chat, if Zoom is as good as video chat ever gets, like, how are we going to have this sort of fully remote and distributed world? And so I called up my good buddy, Yang Mao. Yang and I have worked together on every startup I've ever done. He built the Android app, which was used by millions of people at Sonar. He was the CTO at Switch. And so I called him up, and he had just rolled off being head of all sort of consumer-facing software at Oscar Health, which is $1 billion insurance company, and quit right in the middle of the pandemic, right in the beginning of it. I was like, Yang, everyone's going to think you got fired. He's like, I just can't handle it anymore. I got to start something. And, he was going to start a mobile UI company. And I said, Yang, you might make some money doing mobile UI, but that sounds so freaking boring. There's this much bigger and more exciting opportunity. Everyone's on video. Video is the future. Remote and distributed is the future, but it sucks. There's got to be something better for group video chat. And you know what? Yang, in classic Yang fashion, he's a man of few words. He comes back 2 weeks later. He's got a prototype for Kumo Space. And what is Kumo Space? I mean, Kumo Space is what we call, it's like your virtual headquarters where remote teams show up to work every day. And so it's basically, video chat meets video games. You kind of show up, you can see your whole office, you can see where people are, who's meeting, you can see what they're presenting. And so instead of like your typical, I sit at home, work from home all day, I have a couple Zoom meetings, I'm on Slack, but I fundamentally feel completely isolated from everyone else on my team. I'm siloed. I don't, have a contextual awareness of what's going on. I don't feel connected to my coworkers, and I'm basically just getting burnt out. Kumo Space gives you a place to show up and really connect with your team and get work done. You collaborate just like a physical office. You go to Kumo Space to do a bunch of different things. You go to Kumo Space to get work done. You go to Kumo Space to collaborate. You go to Kumo Space to connect with your coworkers and maybe joke around and have a little bonding, play some games. It's all the things you have a physical office for. We just do that remotely because we think that sort of in-person experience is still important, but we want to provide it at a 30th of the cost and make it available for full remote distributed teams. So that's Kumo Space. We basically started in May 2020. We launched in August. We raised a seed round from Bold Start Ventures, close friends of mine, guys I always wanted to work with after my first startup. Raised a seed round from them in November 2020. And then we actually grew it. We've got a couple million users now, 20,000 teams from all over the world using it. And we actually just announced our Series A $20 basically a $21 million round led by Paul Murphy at Lightspeed. Amazing guy. He was a founder himself. He built a gaming company called Dots, and now he's investing in the future of work. So off to the races there. Really just want to make remote work fun again, if you will. I don't know if it was ever fun, but we're going to die trying making it good.
Yeah. Well, it already looks fun. When I was cruising around on your website, I was like, oh my gosh, this is the coolest thing. Like, where has this been the whole time? So thank you for inventing something and making work cool again. So all the fun without the commute. So that's exciting. Living in New York, I'm sure you can appreciate that. So you raised a seed, you're going through Series A, you're doing your thing, man. You're not only a funder and a founder, but you're also a professor. So many cool things. Now, with that vast knowledge, experience on both sides of the aisle of funding and founding businesses, what are some of those key lessons that you can provide for our fans around the world? What are some of those key takeaways?
All right. So I was thinking about this before the show, and I think I've got three core lessons, which will try to be punchy, right? The first is
thank you.
Given, and this I think is something you probably have a lot to share about, is how do you do multiple things well? And the core lesson for me is if you can do lots of different things as long as they all reinforce each other. So if you do multiple things, but they're all completely separate and you get pulled in, a bunch of different directions, you'll never go anywhere. So for me, I'm always trying to figure out how my three things, right? How my investing, how my startup, and how my teaching can all reinforce each other. So every time, I teach a class on analytics, I think about, okay, how can this benefit my investing? So for example, I teach data analytics, and what did we do? We built a quantitative sourcing mechanism for charged ventures as a way to increase my deal flow. I use my Columbia gig every semester I get one TA, and then that TA, I usually try to find someone who wants to be a venture capitalist, and I try to place them in a venture fund, so then they send me deals. I try to take the analytics from Columbia, and I use that in Kumo Space, and I use that to basically make sure we're fully metricized, and we have an amazing data scientist running the helm there, right? I try to take the work in Kumo Space as a founder, and I try to take the tactics that I've learned for growing millions of users, and then I teach that to my portfolio founders, right? So we're actually constantly teaching portfolio founders how to scale customer acquisition, how to do influencer marketing effectively. Really, we bill ourselves as kind of peer plus. We'll invest in you, and we're entrepreneurs as well. We're just happen to be 12 to 18 months ahead, right? So we're investing in a seed guy. We're like, hey, we'll show you how to raise a Series A. We just did it. Here are the latest contacts. So the first lesson is, if you're going to do multiple things, make sure that they all reinforce each other, and that way you can do multiple things well. Second,
brilliant.
The second thing is what I would call FOMO fundraising, and so I know a lot of the people here are founders or investors, and even if you're an investor, you got to get that money from somewhere. So unless it's your own capital, you got to raise capital, and so I think we'll say it's a three-step process. We'll start with step zero. Step zero is take the 3 to 5 investors that you admire, that you absolutely love, that you write on your short list, that you want to get in front of, right? Those are the people you actually build a relationship with. You try to touch base with, build rapport with. Everyone else, just ignore, because everyone reaching out to you cold, all the analysts from the growth equity shops that want to talk to you at your seed stage startup, they're not going to fund you anytime soon. They're just trying to get information from you. So put all those people on hold. The day when you're ready to start your fundraise, step zero is have your whole CRM ready, have already crowdsourced a list of investors you're going to go out to from your existing investors, friends, family, have it ready. And then on Saturday, you text the 3 to 5 people that you've built a rapport with, and you say, all right, giving you the heads up. I'm going out next week. I'm going to start my fundraise. You're getting the 24-hour head start. If you want the look, let's jam. And so just an example, I did this with Bold Start, with my buddies from Bold Start and a couple other funds. I texted Ed, Sim, and Elliot on Saturday at 12 p.m. By 12:30, we were in a Kumo Space. By 1:30, we had basically handshaken on a deal. That's what it takes to move fast and venture these days. That was a Saturday, right?
Yeah.
If you don't get that done, you kick off your process. And so here's how I think about the process. You lay a 6-month process, and what you do is you have your first meeting with everyone, and you meet people. You introduce yourself, and you say, here's who I am, here's what I'm going to do. You have your second meeting a few months later, and you say, you catch them up and you show them that you're doing exactly what you said you were going to do. And then the third time you meet with them, you actually don't request the meeting. You basically create the meeting, and you create FOMO. And so you can do that by creating press that will get into their hands. You can do that by back channeling through mutual contacts. But basically, you want people to think, wow, that guy, he told me what he was going to do. He's doing exactly what he was doing. And now I'm going to miss out on it if I don't get on this bandwagon. So then they reach out to you, and then, they're reaching out to you, and they're on your turf, not theirs, right? You're not going them and begging them for money, but they're coming up and offering you cash. And that's a position you want to be in when you're fundraising. So that's what I would call FOMO fundraising.
Wow. And so FOMO fundraising, as well as just really working those different angles, and finding, if you're going to be a crazy man like yourself or me who's just busy doing all these things, find a way to integrate them and reinforce it, and it'll all just turn into one thing. You didn't say that. I certainly did. And so as we round third base, is there any final remarks or anything else you'd like our fans around the world to know?
I think the final remark is, I'll just tell after Sonar, I had a really tough time. I, came back and I did what I would call a rebound startup. And so, I did it. I don't know anyone here who's been in a rebound relationship. It's okay. You don't have to be ashamed. We've all done it, right? But it's, you maybe you get broken up with, or it ends poorly, and then, you jump right into a new relationship. And, why do you do that? You usually do that because, there's something you have to prove, right? You want to prove that you're lovable, prove, that you're valuable. And so I did, after Sonar, I did what I call a rebound startup. So, I jumped right into another startup. And why did I do that? I didn't do it because I had an amazing idea or because I had something where I really thought I was going to have edge. And I did it because I wanted to prove that I was going to be a good founder, right? That I could, be a good entrepreneur. The truth of the matter is that just doing something because you want to prove that you're a good founder is actually a terrible reason to do a startup. You should only do a startup if you have an amazing idea with edge and some passion. And so I actually took 7 years between, until I didn't do that startup, rebound startup. I, rolled off within a year. My co-founder, Yarden Tabmore, he was CRO of Taboola. He actually went on and, kept going. He's actually a really nice guy. But I knew it wasn't for me. And so I learned my lesson, which was, don't do it unless you're really passionate. So it took me actually 7 years to do the next startup. And as an investor in Charge Ventures, I saw lots of great ideas. If I saw something that was really a high growth opportunity, high margin, viral mode opportunity, I would usually just give them money because, Ryan, it's a lot easier just to give people money and collect a check a few years later than it is to build a startup.
Agreed.
But what convinced me to do Kumo Space was that it was, it spoke to me personally, right? It was about how do we use technology to connect people in a more human way. And so I realized that there's nothing else I'd rather do than this. And I couldn't help but do it. And so I would say, if I had to say, what's the core lesson is that, I know entrepreneurship's in vogue, but I think you should only do a startup if literally there's nothing else you can do. You literally can't imagine doing anything else, and you're so compelled to do it, even if it's a bad idea. This is what you're going to be excited that you spent your next 5 years on. And so look for that passion and don't stop till you have it. And it's clear that you're passionate about what you're doing, Ryan. And so I hope you can infect the rest of your listeners with that passion, and hope that everyone finds theirs.
Well, thank you. You're very kind, Brett. And, I would echo that, certainly find those things. And, learn to, as we wrap things up, just final remarks is learn to integrate your tasks so that they reinforce your respective outcomes. Learn to create FOMO. That's hilarious, and I'm going to use it, Brett. So thank you for sharing that. FOMO fundraising. I absolutely love that. You should teach that in one of your Columbia classes as well. And then finally, just look for passion in the process. And you do these things, and you too will be well on your way in your pursuit of making billions.